Hello viewers, we will be going over WTI crude oil. In this video we'll be going over the day-by-day probability model, how we find the models, and we'll go over the day-by-day forecast for WTI crude oil. So back to the technical analysis. Today we are down 19 basis points on the 1 hour chart. We are approaching negative MACD. We are remaining resting on the 50 moving average support. On the 4 hour chart, we are approaching, or we saw a convergence overnight between yesterday and today, and we saw a convergence between the 9 moving average and 18 moving average. If we expand out to the daily chart, we are touching the oversold RSI, and we are still far in negative MACD. As for resistance, if we do manage to make a reversal in this downtrend, I do see our first resistance being the 18, or I should say 9-day moving average, this blue line, and that also coincides with past support levels, and since we're below the support levels, that now act as our resistance. And if we were to continue to head down lower, I do see the next support level being around a price of $52.20, where we left off back in last year. We had a support in October 7th to October 11th, and we did touch that level for a moment back in January 27th. So I do see us possibly attempting to reach down that level once more. So if we do manage to head up higher, that price movement is roughly around 4.5% to the upside, and to the downside it is around 2.1% to the downside. So back to the day-by-day probability model. As the day progresses, we do see a tight concentration between the first standard deviation lower and standard deviation higher. So we do see a 50-50% chance on both sides. So overall, I do see a tight concentration, not much to the upside and not much to the downside. So most likely we'll encounter sideways price action in the next coming days. So again, the model is now available in the link below, so do check it out. So we'll go day by day where USO will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to July 2nd to September 26, 2012. So let me point out why these two charts are similar. So the pattern is pretty basic. We average above the middle Bollinger Band for several days, or should say several weeks, and then we proceeded to break down to touch the bottom Bollinger Band right near the end. So we have those two patterns, and we start to see a similar pattern in the trend in question as well. We averaged above the middle Bollinger Band, and then we proceeded to touch the bottom Bollinger Band right near the end. So we have about 1-2 points. We also have 1-2 points. So there's reason to believe that the trends and patterns are the same. The ultimate forecast should be fairly the same. So the model that we just examined was July 2nd to September 26, 2012. Back then, WTI crude oil was down roughly around 18 basis points. So again, it coincides with the day-by-day probability model on this standard deviation, 50%. So overall, we will most likely see sideways price action for WTI crude oil. Again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.